this computer. Okay, hi everyone. Thank you for coming along today. We're just starting things off now. So I'll do a brief introduction. We've got Nikki Lloyd from ESPC Lettings, the head of ESPC Lettings. We've got Paul DeMarco, who is a mortgage advisor with ESPC Mortgages. And we've got Aileen Venables, who's our expert solicitor today. I'll be answering all your questions. Just to give you a brief schedule of how things will go today, we're going to have an intro from Nikki, who's going to talk briefly about the market, the buy-to-let market. We're then going to move on to the questions that you guys submitted when you signed up. We may not get to everyone's questions, but we've tried to collate and put them all together as best we can to kind of answer as broadly as we can and give as much information as we can. And we'll also, throughout the session, be taking your questions, which we'll answer at the end in a live Q&A. So you'll notice you'll have a Q&A box on the bottom of your screen. So if you have any questions throughout, you can just pop them in there. And at the end of the session, we'll answer them there. So I'm going to just pass across to Nikki now, who is going to do a brief intro.
Hi, thanks, Will, and thanks everyone for joining us today. Just as a really kind of a brief intro, as Will said, as to what's happening. So generally, the rental market has been pretty good throughout various restrictions. Things have been able to continue, which has been great for everybody involved in the industry. But kind of figures more recently are showing maybe that the Edinburgh market is starting to kind of feel the effects, maybe due to lack of kind of tourism, the uncertainty around in students, whether they're returning to the city. It just means there's maybe more stock on the market than we would normally see at this time of year. I've actually got some figures a little later about kind of yields and average rent, so I can kind of go into those things in a little bit more detail. It is kind of worthwhile considering that even though we're seeing things maybe come down in Edinburgh, we were at an all-time high, kind of year on year for the last 10 years. Things had just been going up and up and up. So we were maybe at the point where things started to need to come down a little bit and just adjust to a more realistic figure. There still is demand from tenants. People are still looking to move. So if you're able to purchase a property at the right price, then absolutely buy-to-let is still a good investment.
Thank you very much. And I forgot to unmute myself then. Okay, perfect. So yeah, we're going to move on to the questions you guys have been asking when you signed up. So the first one is for Nikki. And what's the best area to buy one bedroom flat for a month, and how are one beds doing in general?
So generally speaking, one bedroom flats are probably the most competitive section of the rental market. At the moment, there are currently advertised on CityLets. So CityLets is where a lot of the agents in Edinburgh will advertise, and there are currently 950 one-bedroom properties live and being advertised. So it's a lot of competition. So if you do have a one-bedroom, you need to make sure you're looking at good rents and that it's looking as good as it can. In terms of what's the best area, there are kind of what's best for yield and what's best for attracting tenants, and sometimes they're the same places, but not always. So in terms of yields, what we've got some figures here for one bedrooms. So the best yield at the moment, you're looking at EH16 postcode area, so kind of Liberton and the surrounding areas, where you can expect a yield of 5.5% at the moment. Also EH1, so kind of Old Town, that's offering 5.5% on a one bedroom. And then EH12, so everything from kind of Haymarket out kind of Roseburn and Murrayfield and out to the Gyle, that's offering 5.3%. In terms of what's popular with tenants, then we're kind of seeing a move from kind of some areas which have been popular in the past. The likes of Gorgie, Dalry were always super popular, but we're actually finding that the market is really flooded with one bedrooms there at the moment, and maybe not so many people looking to move. And actually the areas like South Gyle and Southside, where people are getting a little bit more more for their rent, a little bit more outside space. Then they're becoming more popular with renters. Leith, always popular, and that still remains popular. Yield there at the moment on a one bed is 4.9%. So that's kind of where things are at the one bedroom market at the moment. Perfect.
Thank you very much. So the next one is for Aileen. This is a bit of a broad question, but I think we hopefully answer it. What insights do you have as to when it may be possible to rent cottages in Scotland? So I know we had to drill down a little bit into this one to maybe answer it, but I'll leave it to you.
Okay, I'm not very sure if this is when, in terms of the lockdown and COVID regulations, it means when can we go and rent property, and of course that's don't ask me, ask Nicola Sturgeon. The answer is when it may be possible to rent cottages in Scotland. Well, really, you can rent at any time, and rent you can still. House moving can still go on, subject to COVID. I call them COVID sensibilities. Everybody wears a mask, you don't touch anything, you wear gloves, just everything that we do really now in the new normal, sadly. So, and as to renting, what insights do you have when it may be possible to rent cottages? If the cottages are there, you can rent them. Again, really on as far as a buying market is concerned, I've got to say that the market is pretty strong just now for buying and selling, particularly selling at the moment. And that is very much because demand is outstripping supply. And also, of course, there's the stamp duty issue, that stamp duty or land building transaction tax. Lawyers love acronyms, LBTT, you call it. That basically is going to increase, broadly speaking, from the end of March. So everybody's trying to buy before the end of March, and therefore, of course, the prices are going up for selling. So the answer is a very broad answer. Like all lawyers, we never have a simple answer to anything. And probably Paul would be quite good to come in here as to what he thinks about renting cottages, and same with Nikki, because it's a bit of a broad question really for me to answer.
Oh, sorry, Paul, you're muted.
You're muted. Paul?
Yeah, sorry, yeah. This one's more for Nikki if it's renting and more kind of the mortgage side.
Yeah, so I'm not sure if it's maybe related to, I think there is the thought that people are maybe escaping the city and looking to rent kind of outside of the city and maybe a more kind of cottage rather than a city centre flat. And is it possible that we can do that and move outside of our own council areas to do that? Which, yes, the answer is, as Aileen said, yeah, you can move at the moment. So if you are living in the city at the moment and you've got the idea of wanting to rent, to move out to the country, to have that kind of lifestyle, then, there's nothing stopping you being able to do that now. Yeah.
Cool. Perfect. Thank you, guys. So next one is for Paul. We have a relatively small deposit. Would we be likely to get a mortgage? A buy-to-let mortgage. Our tenant would be our postgraduate son.
Okay. For all buy-to-lets, whether it's what we call a family buy-to-let, in this occasion it would be, you would need a minimum of a 25% deposit. So it depends how large your deposit is, but you definitely need 25% of the valuation or the purchase price, whichever the lower. In addition to that, you can get a what's called a family buy-to-let. There's not many lenders that will do this. I think there's only 3 that would entertain it, but it can be done. Another way of doing it, of course, is to buy the property in the son's name in this situation, student son's name, and get mum and dad or mum or dad to guarantor the son. There are tax advantages doing it this way as well. One of the main ones is to avoid what we call ADS tax. I don't know if Aileen wants to come in a little bit on that.
Yeah. ADS again, acronym, is it? somebody will tell me if that's wrong that I'm saying that. It's additional dwelling supplement. An additional dwelling supplement, the principle is if you are replacing your only or main residence, you do not pay additional dwelling supplement. You may pay the standard LBTT, but you don't pay the additional. And the additional is 4%. So if mum and dad are buying the flat, then that will be not be mum and dad's only or main residence. So therefore they will pay ADS. If son buys it, as Paul says, then that will be, assuming son doesn't own anything, that will be son's only or main residence. So therefore he will not pay ADS. He will pay, if it goes over certain thresholds, he may pay land and building transaction tax. Now, lawyers are always pessimists, and lawyers think everybody's going to fall out. Every family situation is going to have an absolute meltdown, and you're never going to speak to your parents again. And the parents are never going to speak to them again. And we're slightly cynical about it. So what we recommend in that situation is, because you're buying it in son's name and mum and dad are guaranteeing the mortgage, then son should probably, and with mum and dad, enter into an agreement, basically to say, I can't decide I'm going to sell this, buy a Lamborghini, and you don't get your money back. Okay, I think a nice flat, you would buy a Lamborghini. Anyway, I mean, you might want to buy a Corsa. Nothing wrong with a Corsa, nothing wrong with a Lamborghini, but you know, I think you've got the gist of it. As far as the guarantors are concerned, basically, broadly speaking, again, guarantors, mum and dad are guaranteeing the whole of the rent. And generally what happens is that postgrad son, well, but son who buys it pays mum and dad the rent, and mum and dad pay the mortgage, or they pay the mortgage and mum and dad, you know, it's you work it out in a family situation. But the important thing about the guarantee is that if something happens and son defaults in the mortgage, or daughter, and cannot repay the mortgage, mum and dad or guarantors have to pay the full sums due to the lender, but they would take separate legal advice about it. I did say there's never a simple answer for a lawyer. I've got to say, so that's the simple answer. I should just mention as well, to work out about LBTT and ADS, there's a very good website, Revenue Scotland's website is excellent, and that's what I do. So you just go on Revenue Scotland, Google in LBTT calculator, go into it, and you just follow it from there. And as long as you put the date, some date from today onwards, so you go tomorrow and next day, it automatically calculates it for you, and it's very good.
Cool, perfect. That's excellent. Thank you very much, everyone. Okay, so the next one is for Nikki. What is the view on the short-term lets market post easing of lockdown restrictions? Will it be possible to use the flat personally and lease out in between uses?
Short-term lets have always been a little bit contentious, and are of recent times, you know, there are going to be more regulations coming in. So the proposal was that there was going to be, it was becoming a more regulated industry, and that was going to be from kind of spring this year. But that is still subject to approval by the Parliament, and it includes licensing schemes and control regulation areas, but that still hasn't been agreed. And just as recently as early this month, the local housing minister has submitted information to counter the government's proposals. So in terms of the legislation about short-term lets, that still is a little bit up in the air. In terms of how the market is going to perform, then as we know, there are so many other things going on that makes it kind of difficult. But I suspect that people will be doing a lot more staycations. Travel overseas is likely to be restricted. So if people are going to be holidaying in the UK more, then you may well see yourself with more bookings once we're able to do that. Can you use the property yourself? Then, well, yeah, if you're doing short-term or holiday lets and you have a calendar and you can leave a period of time empty for yourself and can do so safely with kind of times for turnaround and cleaning, then yeah, there's no reason at the moment why that can't happen. As I say, legislation may make changes, but they are really still very much up in the air at the moment.
Perfect. Thank you very much. So next one is for Paul. I already have a single mortgage on a flat I live in. I now want to buy a house. Can I keep my flat as a buy-to-let and get another joint mortgage with my fiance?
The answer to that is yes. This is classed as a let to buy mortgage. So what you're doing here is you're actually going to let out the flat, okay? And what you would do there is it depends on who the mortgage is with and how much the mortgage is, etc., etc. But you can either get a consent to let from the existing lender, that's getting approval from the lender so you can let it out, or alternatively, you can do a remortgage onto a buy-to-let mortgage, okay? So that's what you can do, and you can certainly buy another property with your fiance and buy a house or buy any property for that matter. Now, the only thing with that is that, again, and Eileen will back me up on this, you will probably have to pay ADS, and when you go to sell the property that's not your main residence, you may be subject to capital gains tax as well.
Yeah, just to come in there, Paul, I think it's very important to point out, as you say, you will be responsible for ADS because, again, it is replacing your only or main residence. Now, what we get a lot is we get people to say, well, I own the flat, but I'm going to buy jointly with my fiance or somebody else. I don't have to pay ADS. No, you're taken as a couple, you're taken as a unit. So therefore, you are, even if one owns a buy-to-let or owns their existing and you buy jointly, then will have to pay ADS. Now, if you have one person owns the flat and partners say, well, the other person is going to buy the house and that is their first flat, that is their first house, they do not own anything else. If the declaration which you sign says that that is your only or main residence, you would not pay ADS. But I stress, you are making the declaration. The lawyer is not making the declaration there. The other thing with the capital gains tax, because you say that you have a single mortgage on the flat, it might be an idea to transfer the mortgage into joint names, because looking forward, when you pay capital gains tax, if you pay it, the capital gains tax, and my apologies to people who are listening know what capital gains tax is, but I'll just explain it. Capital gains tax is, as it says, it is a tax on the gain you make. But presently, and we talk about what the present law is, presently you're afforded a £10,000 each allowance. So you can see where I'm going here. If one person owns a flat and they sell it in years to come and they make a gain of more than £10,000, they'll pay tax on extra over 10. In other words, if they buy it, they bought it for 100 and they sell it for 120, one person will pay tax on the 20,000, on 10,000 of the 20 gain. However, if two people own the flat, then the two people will get £10,000 each allowance. So in that instance, there might be a bit of tapering relief, and it's terribly complicated, all of it. But broadly speaking, you may only have to pay capital gains tax on over 20,000, although you would have to prove that the gain that was made from the date the second person came in took you up to didn't take you over the allowable 20,000. I wish I'd never started that, actually, but hey, there we are. I wrote of something. So it's maybe worth a thought, but then again, it comes into, with, as Paul would say, advice that will come into mortgages and how do you do it jointly and all that sort of stuff. So as I said earlier, there's never a simple answer.
No, it's good to get the full answer, because that's why we're here. Okay, so I think the next one is for Paul as well. My current property is 100% paid for. Can I use the equity from my current home as a deposit for a buy-to-let? What are the costs associated with this?
Okay, well, this one's a yes as well. If you don't have a mortgage on the current property and what we call unencumbered, you can release equity from that property to either purchase a buy-to-let outright or to put down a deposit. And the cost of this for a remortgage would be basically solicitors' costs and possibly a mortgage fee as well. So what you're doing is you're remortgaging a property that doesn't have any debt on it, and with a lender, and basically all you will pay there is a solicitor costs. Sometimes some lenders do offer with buy-to-let remortgages, these sometimes offer free solicitor costs if you use the lender's solicitor. Not in all cases, but in some cases. If not, you would obviously use Aileen. And basically, the only other cost would be a small booking fee towards the lenders if you wanted to pick a fixed rate, or even nowadays with a tracker as well. So if you can do that, it's absolutely fine to do it, and there's nothing to stop you doing it. And I've probably done 3 or 4 of these mortgages last year. They're not that common, but it can be done.
And again, Paul, you've got the ADS and the capital gains
the
tax.
Dreaded ADS again.
The dreaded ADS. And
once
the
again.
Dreaded capital gains tax. Basically, the ADS catches all buy-to-lets, I mean, broadly speaking. The other thing I was thinking about, Nikki, was what the allowable deductibles are when you rent out property. Because of course, I don't know if I know that you used to be able to deduct your mortgage interest. Can you still do that?
Yeah, so there have been lots of changes in terms of how and what you can claim tax relief on, and mortgage was one of those things that was effective, and essentially over a period of time it was kind of reduced down. I'm not sure what year we're at now, but I suspect we're coming into almost the 4 years that since it was introduced, and where it comes to nothing. So we started at 100 and we've literally come down, and I think we're probably at 0 now in terms of the mortgage, but there are still other things. So there are still professional services, replacement items. You can't get tax relief on anything you repair. So if your washing machine is, kind of cost you quite a lot to repair, it might be better just to buy a new one for your buy-to-let flat, because you can get mortgage relief on that. So there are things that you can get it on, yeah, but it has changed recently.
And I think also, just being the cautious lawyer, that to really take advantage of what you can offset against tax, you really need to take sort of accountancy advice on that.
Yeah, I mean, you can do your self-assessment yourself, and you can enter in your figures and kind of calculate from there. But with anything in connection to do with tax, I would always recommend taking professional advice, because it's one of those things that if you don't get right, we'll keep following you.
Yep.
Yeah.
Okay, so the next one is for Nikki. What future trends in the buy-to-let market should investors be planning to buy now? Investors, let me see if I can remember how to speak. What future trends in the buy-to-let market should investors planning to buy now be anticipating, especially with regards to two beds versus HMOs?
So it would be great if I did have a crystal ball, but I don't. So I can kind of give a gauge of what's happening at the moment, but things are just changing all of the time in the industry, and more so now than ever. But if you are thinking about an investment based on what's happening at the moment, I would say two bedrooms are probably the best option. It's what we get the most inquiries for. It's what most people are looking. It's the most flexible type of accommodation. You can have a single person who wants the extra room to work from home, a couple who wants the extra room, two people sharing, a young family. It really covers a lot of bases. So I would say that a two bedroom is probably the most popular and kind of the most reliable kind of buy-to-let property at the moment. HMO flats are having a tricky old time of things. They are predominantly occupied by students. And of course, there's the uncertainty about where and how and when, students are going to be studying. So we've actually seen tenants kind of give notice, student tenants give their notice at times which are falling out with the normal academic years when we would normally see notice. So that's leaving landlords with vacant properties or vacant rooms and not necessarily anybody coming into the city to replace them. So HMOs are having a little bit of a tough time at the moment. As we may know more about how education returns, then I suspect all of those students that are stuck at home will be desperate to get out and get back to the city. So once we know more and we can get back in the city, then boom, it's off again. But at the moment, probably I'd say two bedrooms were the best bet.
Like I say, it's not just students that are keen to get back out again. I think everyone is very excited for when the pub reopens. Okay, so the next one is for Paul. Applying for a buy-to-let mortgage as a company as opposed to an individual.
Yeah, sorry. Yeah, this is quite a long answer here, and I'll give you as much on this as I can.
Oh, James, don't put it on to me if it's a long.
No, no, I won't involve you in this one. Don't worry, Elaine. I'm gonna suggest that if you are going to go down the company buy-to-let route, you must speak to your accountant. You must. It's an absolute must, because he or she will know a lot more about the tax situation than I do, and also, no offense, Elaine, also with Elaine.
Absolutely.
Because these guys are the experts on this. But anyway, I'll answer the question. Individual means, yeah, you buy the property, you're the individual and you buy it. Basically, the company buys the property, okay? So for both, you must have a minimum, again, of 25% deposit. Some of the tax stuff, you still have to pay capital gains tax, which Aileen comprehensively described earlier, on the sale of the asset, no matter whether you're a company or a individual. So company buy-to-let, you must set up what's called a special purpose vehicle, an SPV. You also obviously have to be a limited company, and your accountant can set that up for you as well. So you have to have an accountant, obviously, to do this. The advantages are you can grow your buy-to-let portfolio, that's if you have obviously more than one property, quickly within a limited company, and there'll be no income tax on the retained profit. So basically, you're allowed then to reinvest the cash, although corporation tax will be payable currently at 19%. Corporation tax is a tax that's paid by a limited company. If you're a limited company, whether you're an individual limited company or a large corporation, you pay corporation tax. The other advantage is any investment that you make personally into a limited company, you can drop that back out of the company because it's classed as what's called a director's loan. Okay, so this is quite highly complex stuff, by the way. The rate of corporation tax, as I say, is currently 20%, which means your liability is reduced compared to if you were a higher rate taxpayer In England, you'd pay 40%. In Scotland, you'd pay 41%. But corporation tax is 20%. The other advantage is, if you want to call this an advantage, is that the company own the property, not you, not the individual. But as I say, I've got to stress, you must speak to the accountant on this one. This is really important, okay? As I say, there are a couple of disadvantages, but not many. One of them is if you shouldn't really be transferring your existing portfolio or a one individual property that you've already set up on an individual basis into a limited company. If you're going to do it, you must speak to your accountant, because there may be disadvantages from a tax point of view as well. And the other disadvantage is, and this is quite, well, it's not a big one, but it is a disadvantage, is there are a number of there's a reduced number of lenders that do company buy-to-lets, and also the interest rates are probably at least up to 1% higher. So they're the advantages, they're the disadvantages, but I'll have to emphasize, you should really, before you enter into any company buy-to-let, you must get your accountant's advice, because each individual person will be different. An individual buy-to-let is a bit more straightforward, where you basically do it, you need 25%. And I won't mention ADS again, though, because we've done that to death. And that's the answer.
Really, Paul, just to add on to that, because I've always got to sort of add something on, I think. The other thing about company mortgages, and I've been doing this a long time, and I don't think I've ever seen a lender not insist on a personal guarantee.
Yeah, personal guarantees, absolutely.
What we call it again, a PG, an
Yeah.
SPV and a PG. But a personal guarantee is where the directors, who are essentially the owners of the company, personally guarantee the mortgage. So the doomsday scenario, mortgage can't be repaid, company's dissolved. People think happy days, it's a limited company, it's limited liability. There's a personal guarantee. So the personal guarantee basically is what it says. It means that the lender will pursue the directors who have granted the personal guarantee for repayment of the mortgage. So essentially, it comes to the same thing as buying it in an individual name. So I think, and again, hands up, like as Paul says, an accountant, I think it is very much, if you're going to go down that route of the company, it is purely for tax purposes, because the benefits from putting it into a company name from a liability point of view, they're not really there.
Okay, perfect. That was very good answers from everyone, I think. The question about is it better to own a flat and rent to my child, or buy a flat and put in their name? I think we've answered that.
We've
yeah,
done
cool,
that.
cool.
On that one, yeah.
Yeah, I just want to double check. Okay, so the last from the pre-submitted questions is for Nikki. I think it's pretty straightforward. Are ESPC still having people move in and out of rental properties during COVID?
Yeah. So fortunately, the housing market has been able to permit house moves. Essentially, all home moves are permitted. In current guidance from the government is that's fine, as long as they can be conducted safely. You can move from different areas. Again, as long as everything is done safely, then that's fine. It's permitted to leave your home for any activity in connection to moving home. So that includes viewings, provided they can be done safely, although certainly the recommendation at the moment for both buying and renting properties is virtual first, and then if you've expressed a real interest, then we are able to safely move towards physical viewings. But yeah, absolutely, you're permitted to be able to move home.
Perfect. Good. Cool. Okay, so that's the end of the pre-submitted questions. We've had 5 come in over the course of today. So the first one's from Linda. This will be for Paul. Is there an upper age limit for getting a buy-to-let mortgage? Yeah, you're muted, Paul.
There is and there isn't.
Oh, that's a lawyer's answer, isn't it?
No. There are a couple of lenders that will go to 85. So usually 80 is kind of the maximum age. Normally 70 is the most popular kind of upper age cap with any lender, especially for a buy-to-let, and then go to either 75 or 80. So that's the best answer I can give, really. That's it.
That's the answer. Okay, next question is from Helen. This is a bit of another one of a crystal ball one, so I don't know if you guys, who wants to take this one. Do you see the market changing? Yeah, Nikki, I think you're the you can see the future the best out of all of us. Do you see the market changing to more of a buyer's market after the changes in March? And I'm assuming that's the LBTT changes that are coming in.
Aileen, I'll leave that one to you.
Yeah, it's an Aileen question, that one. Yeah.
Excuse me, I'll just go and bring my crystal ball from, and it's a government briefing on just about the on. We don't know, and obviously, the not so much this lockdown, but the buying and selling market, the last lockdown, March, April, and May, we had quite a hard time of it. Unfortunately, we've not had such a hard time of it this time. I don't know. Nobody knows. I was speaking to a surveyor this morning who said to me, however, that he thinks, and I think the surveying profession think, that the market is going to be quite strong in April. Now remember, starting in April, the first home fund comes back. And last year, and Paul will bear me out, it was phenomenally busy. I was the busiest for I don't know how long over last summer with the First Home Fund. First Home Fund's a government scheme where they basically lend money, you don't have to get back and go and sell it. So the answer, this is a lawyer's, what is it, maybe aye, maybe nay, answer. I don't know, we never know. And I have legal friends who say, oh, I'm worried about next month because we don't know what's happening. Well, we never know what's going to happen. So the answer is, we don't know. I think there is more confidence in the market this time than there was last time. And Paul and Nikki will maybe bear me out on that. And, remember, the overriding message from the government is stay at home, do not go out. Now, if we're doing this well just now with that message, we'll probably do pretty well next year. But that's the lawyer's waffly answer of basically.
No, perfect.
Okay.
Okay, so the next one's actually an ADS one. So we may have already answered this. I'm trying to wrap my head around it. That in relation to ADS, if you live in a property but don't own it and purchase a flat on a buy-to-rent basis, is ADS applicable? So I think if you were, for some reason, renting and you didn't own it, and you then purchased purchase a property to lease, to let, would ADS be applicable?
Right, no, you don't pay ADS. Remember, the mantra with ADS is if you replace your only or main residence, you are okay. So if I take, for example, take myself, right? Okay, I own my house, I like where I live, okay? If I decide, because I own my own house, I'm going to buy, no, not because I own my own house, nothing to do with it, but if I buy my own house, right, and I think I'm going to buy an investment property, I will pay ADS on that investment property. I am not replacing my only or main residence. So if I keep my only or main, if I keep my buy-to-let here, and then I decide, actually, I'm going to sell my house, and I buy another house on the new house because I'm replacing my only or main residence, I do not pay ADS on that. If, however, my son, who rents just now, doesn't own anything else, says, I want to buy a property, and I want a buy-to-let mortgage on that. He does not own anything. So therefore, he will not pay ADS on the new one. The connection between what sort of mortgage you get and what your status is in buying doesn't connect. So if you buy it as a buy-to-let property, provided you do not own anything else, you do not pay ADS. I hope I've explained that properly.
Yeah, no, that makes sense.
Can I just come in for a second and explain one thing about first-time buyer buy-to-let products? They are really rare and few and far between. There's only a couple of lenders that will allow this. So if you don't own a property or never have been a homeowner before and you're first-time buyer and want to do a buy-to-let, there's only 2 or 3 lenders from memory that will do this. So it is a very limited market, but it can be done. Again, you need 25% deposit.
And presumably, Paul, as well, you need a credit rating and a credit.
You would need. They're just treated just like a first-time buyer, so it is more difficult to get, but it's still doable. It still can be done.
Okay, perfect. So one from Kim, another one for Paul. Do you need a specialist BTL mortgage if doing short-term lets?
Not necessarily, no. No, I don't see why. No, the answer to that would be no. Short-term let is, it's just a normal buy-to-let. It's just a normal buy-to-let, yeah. So no, yeah, an easy one.
There's another one from Kim. I'm not too sure. What are mortgage interest rates currently for limited cause? I don't know what cause could.
The interest rate for a limited company. It depends, obviously. So I take it that's from me. Yeah. Okay. So, it really depends. It depends on the fixed rate term, like 2 years, 3 years, 5 years. They're very rare. You can get a tracker on a buy-to-let company buy-to-let. You're probably looking at 4%.
Okay.
On average, it's quite high. For that kind of
in comparison to your
normal residential, or personal buy-to-let,
This is I think we get this question quite often in any event we do. What is the percentage guidance on offers over? So I think I might be able to answer this one because it always seems to be wherever it depends on the property where you're offering, right? It's very, very, it could be, very wildly from Stockbridge to Leith to wherever, and even like streets and then individual properties on that street may be very different. So there is no one hard and fast rule, but you can look at the averages and see what's happening, which give you an idea of that area. But that doesn't mean it's going to be the right answer. Is that right, everyone?
I was about to say there, well, that old chestnut. I think it's quite important that when people see all the press headlines that say, oh, you have to pay 25% over the valuation price to buy the property, and prices are doing this and that. Each property is individual, because it also is, I hate when people say, do I have to pay 20% over the price? It depends what the competition is, and as you say, it depends where it is. So take percentages out your mind, because they really don't apply, and they never have applied.
Yeah, it is a negotiation at the end of the day when you're buying a property.
Absolutely.
And depending on the buyer's circumstances and the seller's circumstances, you may have a situation where the seller is wanting to get rid of the property very quickly, and they'll take a smaller offer because they want to be gone and done. On the flip side, it might be the opposite, and they might just, hey, we're in no rush at all. We've got somewhere else set up already. It really is, and that's the one thing I've learned doing all these
You've
events.
learned a lot.
Well, I hope so. Okay, so we've got 2 questions left, and we've got 2 minutes, which is quite nice, and that's gives us ending on time. What's happening with larger 3 and 4 bedroom flats for renting that are often HMOs? Is there just no demand for these at the moment? So, Nikki, do you want to take that one?
So kind of what I mentioned earlier on is in terms of, they are kind of some are occupied. Do we see people looking for them to move in now? Not really. Will they become popular again? I definitely think so. The student population has always made up the majority of the rental market in Edinburgh, and I don't really see the intention of students wanting to be part of that changing as soon as they can. So at the moment, if you've got your HMO property occupied, then that's great. And I think when we look to a little bit more of the future, we have a bit more of an idea about what's happening with learning and how it's going to be moving forward. And when we can all get back to studying, then I think it will certainly become more popular again. I mean, in the interim, there's no reason why those kind of properties need to be rented as HMOs. There are families looking to move that are maybe looking for larger properties that don't need a HMO license but are looking for more space. There are couples that are looking for more space. So just because you have a larger property, don't feel that you need to be hemmed in to the student market. There's no reason why it's not going to attract other potential tenants, but in the long term, we're hoping that the students will fill them up again anyway.
Okay, so the last question, I'll leave this one open to whoever, I'm not too sure. If I have a buy-to-let property, can I live in that property for any period of time?
Paul.
I was going to say Paul.
Sorry, Paul, you're on mute, Paul.
Yeah, so if you have a buy-to-let property
Mhm.
and you can you live in it? No, you've got to change it to a residential mortgage. It's as simple as that. That's the straight answer.
Okay, a nice simple finish. No ambiguity there. Okay, so thank you very, very much, everyone, for coming along. Thank you, Nikki. Thank you, Paul, and thank you, Aileen. I think you guys answered those questions exceptionally well. I always do learn a lot when I do these events. It's also my last day today at ESPC, so yeah, this is
all
nice
the best.
Yeah, thank you.
We'll have a virtual drink.
Well, hopefully have
Cheerio.
a real drink at some point. But
That would be nice.
So no, and I've been doing these events for the past 6 months, and they've been really good. Really enjoyed them. So yeah, I'd just like to say thank you to everyone for attending.
Well, thank you.
Thank you for putting all this together.
Very well. It's been very good.
Dealing with all of our technical.
We'll miss you, mate. Honestly, we really will.
No, it's I've been at ESPC for 5 years, so it's gonna, this is.
Can we still consider you for the ESPC football team in 2022?
Yes. I don't know if you want to, because I'm not that good. But no, we'll leave it there, guys, and just thank you very, very much. And
thank you.
All the very best, you will.
Right.
Okay.
Thank you, guys.
Cheers,
Bye.
guys.
Bye.
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 Bye.